All right. Hey, welcome to NAAIM Confidential. Interesting episode we have lined up this week. Today, rather than a guest, we are joined by all four of the NAAIM Confidential hosts. Uh, and boy, has there been a lot of stuff going on politically, in the markets, in commodity movements, in the bond market. Holy smokes, there is so much going on. The NAIM Exposure Index came out this week at 83.93, reflecting a general sentiment of de-risking among active managers that are a member of NAIM. But one of the things I want to talk about is don't judge the way that active managers are performing based upon this index because it's a sentiment index and it doesn't necessarily tell the real story of the underlying position. Because it's a one capture in time, it's a weekly data point as of the close of the market on Wednesday. Right?
Yep.
So check it out. Did any of you guys trade on Wednesday?
We traded before then. Actually, the week before we've been paring back. But our number, I think we reported 70 on Wednesday, and we're still that through today. We just kind of rotated what we owned out of tech and those things into utilities and that kind of thing. So,
Well, and that's interesting because there's a lot of stuff that has still been working in the market,
mm,
even with the rotations or with the broad sell-off, right? There is still relative strength out there. It's just not where people have normally been looking because people in America are traditionally, and for good reason, in my opinion, significantly overweight tech, which hasn't had a ton of great relative strength. Uh, but I'm going to take a second to defend kind of the NAIM index here for a second. Because I feel sometimes we get a little bit picked on by JC Peretz over at All Star Charts. And he talks about coming to our conference and this experience where he asked, everyone if they were, bearish or bullish in May of 23. And, there wasn't a bunch of consensus. Last Wednesday, I actually went into the day. One of our strategies went in and we were leveraged short and the market was down. And then we traded back too long right at the end of the market. So the numbers would say that we had been long the week before. We were still, leveraged long. And then, we're leveraged long again. In the midst, though, we actually made some money in short positions. So depending on how nimble and dynamic you are, it doesn't always necessarily reflect in the exposure index. And that's why it's a general sentiment indicator. It's not a measure of performance of active managers overall. So there's my defense for the index.
I'll defend it. And I think it's kind of more because it's a snapshot in time. It's really a concurrent index, and I've done some quantitative studies on what would happen if I just copy the index. And if you do that, you're going to be a little bit too slow. You're going to miss out. But if you can anticipate what the next week's index would be, and kind of assume you get the midpoint between the two, then you have a profitable trading strategy. This is very simple. Just assuming you're setting your equity exposure to that index and leaving the rest in money market. So it's the days that it doesn't get reported that I think there is magic happening in that.
Yeah, I think there is a lot of magic in the days that don't get reported, but it's a very interesting index, and nonetheless, it's just not a perfect index, right? But if you take it for what it is, especially in long-term trends, it's an interesting number. So,
and there are people that report the same number almost every week, who are like a 60-40, and they're saying, and there is that in there. Then you have the Ben Foxes of the world who are plus 200, negative 200 week by week by week. So, and everything in between. So it's all over the place. I mean, I'm kind of in that moderate space too. We're from like negative 40 to 150 is my range. So,
Yeah. Sector rotation. If somebody wants, a good active strategy could be to, be long the three best sectors at 100% exposure. They're going to report the same thing over and over again, and they earn their alpha by choosing those sectors correctly.
Yeah.
Well, it's interesting what you brought up. I mean, Branden and Ryan, you kind of talked about us being 200, 0, or negative 200. And a lot of times, if we go to cash within the strategy that we report for here, we might only take a cash position for 2 or 3 days, and then we jump back in. So, yeah, you could see a long and a long from week to week from us, but not know the activity in between. We could even have an inverse in there. You wouldn't have a clue, kind of like what Branden was saying with another manager. So,
yeah. Anyways, I just I think it's worth talking about the shortcomings of the index sometimes in case somebody thinks it's a more dynamic or accurate data point that they want to really gauge how risky or risk on or risk off they should be according to the general consensus, right? Whether they're using it as a contrarian indicator or not, you got to realize it's longer term in nature. So if you have a bunch of active, really active and tactical stuff going on intra week, it may not always reflect. But one of the things that JC Peretz, brings up is in bull markets, the NAIM exposure index tends to stay long for longer amounts of time, which, I mean, is just an interesting thought point again. But commodities down today. How'd metals shape up today? Metals down. Gold, well, the yellow stuff down a little bit.
Mm-hmm.
Sectors. Did anyone see Intel? You guys saw Intel.
Got crushed.
That is amazing.
Sort of the whole technology sector. XLK got killed.
Well, XLK got crushed, but you'd have to move that decimal over one more point to catch up with Intel.
Oh, for sure.
They're only down 2.8. I wouldn't say that's even crushed. XLK actually interestingly fared better than I think the Nasdaq did here, the Nasdaq 100. Just a little bit.
Mm-hmm.
Caught a bid, 2 standard deviations down from the 20-day moving average. It's kind of where it looks like market caught a bid today. VIX up over 20. VIX up over 23. First time in quite a while. Last time we were at 23 on the VIX was October of last year. Anyone remember what happened at the end of October last year?
It was a great bottom to rally. But the VIX was up almost 30 though intraday. I mean, it had a hell of a spike midday.
Holy crap. Yeah, I'm seeing that now.
And
that is like a that's a big candle there.
Yeah.
Okay, October last year, this is what happened. I went to Chicago for the NAIM conference at the end of October, and we had some great speakers that came in, and there was a general consensus among them that said, hey, favorable conditions. And one of my biggest takeaways was from Jay Coppell, who said, look, I don't do bearish and bullish because those are emotional things, right? Either you have conditions that are favorable or conditions that are unfavorable, and you got to figure out how to stack those up. And the general consensus, whether it was Jay Coppell, Jim Bianco, Ryan Dietrich, everyone was saying, well, not everyone, but a lot of the speakers had data that they felt it was going to be some positive market conditions, and we ended up having signals fire at the end of October. We got long and we made some great money, but it was not the easiest of trades to put on coming out of that summer volatility last year. Anyone? Bueller?
I bet Ben went long.
No one else at Ben.
No, we did too. We were. I think
Ben Fox didn't go long. He was long, man.
He hit.
What?
I was leaving it to Ben.
well, I'm trying to, yeah, I mean, I'm sure I remember Crow Chaser was long during that time for sure. I know High Five was trading a little bit more in that time period. I can't remember. I think it had a few cash positions in that October timeframe, but I'd have to double check.
Uh, I think the general consensus though is like, at least I came away from that conference with a different level of confidence in the market as a whole. And in the strategies that I went and utilized and put on. And I was really grateful that I made it to Chicago last year. This is one of my favorite conferences I go to all year, is the Outlook conference in the fall for NAAIM. And we have our next one coming up in October this year down in Dallas. Ryan, do we have any guest speakers lined up at that conference that you're excited about?
I should know, but I don't.
Oh boy.
I apologize. I'm even on that committee and I don't really know. No, there are a lot of good names that we've flipped through. I can't remember who got confirmed and who didn't. Because there's a lot of like whoever we couldn't get for Outlook is going to be at our Uncommon Knowledge conference in the spring. Mm-hmm. So I kind of know a lot of names, but I don't know which one is going to be in which conference. So apologies.
Yeah.
But I agree. Outlook is my favorite conference too. It's a little bit more small. It's got a good feel to it. You definitely get to know people really well. I mean, that's how I think I got to know all of you pretty well.
Yeah, I didn't go to Outlook for a while. I started going a few years ago, and yeah, you're right. It's a different animal than UK is. It's a lot more intimate in a way.
It is. You really get to know people.
Yeah.
Looks like we have the head of technical strategy and senior managing director of 22V research coming. And this is another speaker right here that I am really interested to hear from. Tell me this is right before the election, because we have the conference October 28th and 29th. Voting is going to take place November 2nd, right? So we're right before the election. And we are getting an election and policy outlook from a managing principal and the director of policy and government relations at Deloitte. That's going to be good.
Yeah.
I'm excited about that. Good stuff here. Good stuff.
I think Danielle DiMartino Booth I don't know if she's confirmed yet, but that would be it. She's a great one, a former Dallas Fed person as well. She's fantastic if that does confirm. I don't know if it is, so I apologize if it's not.
I remember meeting Joseph Wang a couple of years ago in Dallas when he spoke, and that was a good one. That was really good. Well, we've been doing this podcast now, this NAAIM Confidential show. It's been like 7 months, 8 months. We started at the beginning of the year.
Did.
It's been a wild year. What have been your guys' most interesting episodes or epiphany moments in doing the show?
Well, I was genuinely astounded talking to Buff Dormeyer. I think we were both a little nervous because we hadn't met each other. We were both fairly new members at the time, but his technique is unlike anything I've seen. He focuses on technical analysis with volume. And I used to, when I did technical analysis, I always just kind of throw away volume, just data I don't need to put in the database. But he's just got a super interesting approach. And hearing him describe how he sort of solves to figure out what the volume of the real volume of the SP 500 is without, because they don't report that data, they report on the constituents and how to like backward that data out, and how that was kind of like a key to his strategy. That was fascinating.
Yeah, Ben, what about you?
Yeah, so I went through all the episodes, wrote down a note for each of them. I actually had the pleasure of doing the one after the UK conference, which was awesome because I was not at the UK conference. But I know speaking at the UK conference, Adam Koch spoke there, and I got to interview him a few months ago. And he had talked about some of his management practices, and one that had really stood out to me and I've actually used since talking to him. He had talked about setting a minimum. I had always been really bad on, and I should clarify, I'm talking on the Scarecrow advisor side. We do some retail clients. Um, and I just loved helping anybody out with our Scarecrow strategy. I just thought that, like, okay, whatever your amount is, I'll bring you on. And I have been swamped ever since taking that on, especially as being, at least until recently, pretty much the only advisor taking on new clients. And he had mentioned, like, you can, as a firm, still take on those clients, but you as an advisor can have a minimum. Well, now we have more advisors under Scarecrow advisors. So I said, I've said to people, like, here's my minimum. But we have other advisors that can bring on your account if you're under my minimum. And I can point you into their direction. And since we have new advisors that will take on any and every client, it works out great. And it keeps me from kind of focusing on those very high touch but low value clients for me at this time. So that's probably been one of the biggest takeaways and something I've actually implemented since having that conversation.
You bring up a really good point about the hidden value, what I think is the hidden value of NAAIM, and that is honing in practice management skills as an advisor, just through collaboration and learning from the other members in NAAIM, right? When I joined NAAIM, I thought it was going to be all, look at the charts, technical analysis, and it's almost never that. There's some people in NAAIM that really like technical analysis, and I can talk technical analysis with them all day long. There's people that I've never met in person, but I've gotten to know through the community of NAAIM that I could pick up the phone and call and ask them about technical analysis stuff I'm looking at, get their opinion on it. But there's a ton of people that do things completely different and are in a completely different space from the investments they manage. But everyone has a firm or a business, or it has clients, whether your clients are other advisors because you have a fund, or your clients are retail public clients. Everyone has clients, and just learning the other tools and skill sets and what other people are doing to manage their practices has been really beneficial for me in my business. And I just don't think I could understate it enough. I mean, it's really made or break. It's made just the most phenomenal impact on the trajectory of my career. That's all I can say. Like, as investment knowledge aside, it's
no, absolutely everything from that to business planning to succession planning to, we merged with the firm from the acquisition kind of because of that. I mean, no, we've done so many things as a firm. I mean, it started off with just me and 7-8 million, and now we're like SEC registered somewhere in that. Have 4 or 5 advisors. Yeah, I never would have done that without having people at NAAIM to bounce ideas off of. It's just incredibly invaluable. People that I meet and talk to, and I can't believe who I know because of this group, who I can call up. I mean, people you see on CNBC, you're like, oh, hey.
Yeah.
It's weird. It's weird to me. Like, I never thought of myself as somebody who would know people like that. It's just fantastic.
Yeah. Big time. Yeah.
My favorite NAAIM thing, the first conference I went to, there's a session. It was just it was a small group. Everyone else was at a more popular session. So I went to the small session. I got a tax tip. I saved a friend of mine $600,000 on his business. It's the R&D tax credit. It goes back 3 years, so he saved $200,000 a year on his startup.
Yeah, that's worth the conversation.
Yeah.
I think one of my favorite times was when Paul Schatz talked about early in his career and trading gold, and had just an incredible trade that worked out good for him in gold, and felt like a big hot shot, and then proceeded to, like, I'm summarizing here, go back and watch his episode, like lost it all and didn't have a winning trade after that for like 6 months or something. And so he learned to just be humbled by the markets quickly, and you need to learn how to manage risk. It was good. it was a good conversation with full Paul Schatz color, which is always a good time. Well, you guys have any interesting observations about markets, politics?
Well, I was going to bring back one that it was not even my episode. It was Asher's episode, but Rob Hanna had a reference to on how to look at our name exposure index in quintiles and what that looks like. If you remember that, Asher. I talked to him after that because I thought it was such a cool concept. But basically, when our name sentiment index comes back below 60, between 60 and 40 as a quintile, that tends to be a very good, as he said, quantifiable edge for the next week. It's a very good buying signal. So I think that's a funny thing that I got out of Asher's episode. But there's so many good people to reference on here. I did a lot of CMTs in my episodes. It's neat to see different processes because we're looking at the same data. We're looking at the S&P, the NASDAQ, all these things the same, but we come at it and our results and our opinions are completely different. And it's so neat to trade ideas and be like, oh, well, I looked at this and I got this out of it. And somebody's like, you're completely wrong. It's this, like Paul Schatz would, he'd contradict you. But that's fun. I think that's been one of the highlights of my interview list so far this year. It's just been the diverse thoughts and ways that we come at the exact same thing and get different results.
I don't know of any two members in NAAIM that are like the same person. And what I mean, and obviously not, literally, but I don't think I could think of two people that I go, oh yeah, those two guys basically have the same practice, targeting the same audience with the same investment ideas, with the same type of implementation. I don't really think there is.
Mm-hmm.
I'm thinking through right now. This is a very diverse group. It's a very, very unique group of people. I very much enjoy my association. Well, I don't want to just drag on all day. I think we've had some really great takeaways from doing this. I look forward to continue doing it. If there's anyone out there that's listening and you want to come on, you think you have something to say, you want to share something, whether it's a story about your career, what you do in your firm now, you think you have a thesis of why the sky's falling, whatever, we'd all love to hear it. We just love trading ideas and getting to know what else is out there. And so message us, email into NAAIM, message through the YouTube, Instagram, Facebook, whatever, we'll get you on. You can reach out to me at Branden@DucharmeWealth.com. I'll schedule you up. You can reach one of the other guys. We just like getting people involved. It's fun.
You know what else is fascinating is there are more and more financial planners in NAAIM now that I can ever recall there being. And there's now actually a financial planning group that meets monthly that are all NAAIM members who put active management into their retirement planning, into their estate planning and all that kind of stuff now. And how valuable that is just to help people, have downside risk on these kind of situations. So it's neat to see that the financial planning community is starting to embrace what we do because they traditionally have not.
Well, I think traditionally they don't know, they don't always know how. And that's the side that I came into NAAIM from personally, right? I am in the retail client wealth management space and wasn't getting a lot of guidance that I was, impressed with on how to integrate this into financial plans. But I know that when I felt like when I showed somebody what, an index fund would look like a buy and hold low cost index fund would look like. If you zoom out far enough, it looks good, right? Because you're just looking at the return. When you zoom in and look at volatility and say, well, that was the time you would have had to buy a new car, or that's the time that, your kid would have needed the down payment assistance for the home, or that's when you would have had your long-term care event. And so here's what really your risk reward sort of looks like. And here's what the practicality of this looks like over time. All of a sudden, I feel like most people don't care to have that type of risk. Most people, in my experience, cared to have something that was risk managed first and, letting returns sort of work themselves out. And there's a lot of different ways to manage risk, a ton. But for me, name taught me how to start looking at risk different, because everyone looks at different, everyone quantifies that differently in name. And so I learned how to look at active management in a different way, and then integrate it into financial plans and build portfolios with different ideas and different active management ideas in a way that was a lot more effective. So I came in from the financial planning side, and I've learned a ton, and it gave me the confidence that I actually am in the CMT program now. So anyways,
I think Ben had a comment.
Yeah, no, I was just, when you said everybody has a different way of looking at risk, I think about that all the time, because a scarecrow, the way we look at risk can be very different than the way Ryan and so on. But there's so much diversity of thought within NAIM. And I just find that so valuable that, if you're watching this right now and you're like, oh my, I just love the kind of people that Ryan brings on, or I want to, one of the speakers that he has, like, there's a great chance that they're going to be at one of the NAIM conferences, and then you'll be able to talk to that person actually in person too. So yeah, I mean, I know Scarecrow as a company would be nowhere near where we are without the NAIM members. I mean, we've been a part of NAIM. I think Len started mid 2000s, sometime around there, maybe 2005. And I mean, there's countless members that we reach out to on a regular basis to ask just certain questions, and it's just a nice, easy conversation, and the information flows. Like, there's people just share the information very easily in NAIM, and we like to help each other out. I think I was listening back to one of my episodes, and Paul Culbreth went to his first NAIM UK conference this year, and he was just surprised in how open people were when sharing their ideas. And I know Kirk with our company went to his first NAIM conference, said the same exact thing. And we preach that, like, when we talk about NAIM, we say that we're very open about it, but we actually heard it from two people who went there the first time. So it was confirmation of what we were actually preaching out there.
yeah. Well, I appreciate the heck out of you guys.
Likewise.
Absolutely.
I gotta get running. VIX is spiking up over 30. There's things we all gotta do.
Yep.
So, I'm gonna bid you guys all farewell. And I've officially bought my tickets last week for Dallas, so I will probably see you guys all there.
I will be there.
Oh yeah.
Discount ends today for anyone who has yet to purchase.
That's true. It does.
Ooh. All right. Get it while you can.
Minute.
Get it while you can.